Hey gang, Dennis Tubergen here. It is Monday, March the 12th, 2018. I want to share with you today just one way to maybe dig in and analyze a stock index. I'm going to be using the exchange traded fund SPY. It's an exchange traded fund with the investment objective of actually tracking the S&P 500. The chart that you have in front of you right now is a weekly price chart. As you know, I really like to use Japanese candlestick charts. Every bar on the chart represents 1 week of price action, with the green bars representing weeks that the market went up. The red bars represent weeks the market went down. Now, from the market bottom in 2009, I have drawn a couple of parallel or roughly parallel blue lines here, running from bottom left to top right. Now, from 2009 all the way through really late 2017, you can see that prices were pretty much contained in this price channel. This would be called an upward trending price channel. And you can see that that uptrend remained very much intact until late 2017. And at that point, you see prices broke out to the upside, and they've actually maintained that upside. Elliott Wave analysts would call this perhaps a throw-over completion or an exhaustion completion. You often see that at the end of an uptrend. Now, we can look at a shorter time frame as well. If I shorten up my my time frames here to here, I now have the SPY, and I have the same price trend channel drawn from really late 2015 to late 2017, about 2 years. Prices were contained in that price channel as well. You see the same throw over or exhaustion completion here. Now, another good way to analyze trend, and I'm going to blow this chart up a little bit. There's a lot of lines on this chart. The lines that you see here toward the center, the yellow line, the blue line, and the purple or lavender line are moving averages. The yellow line is a 5-week moving average, the blue line is a 15-week moving average, and the lavender line is a 30-week moving average. So basically we're taking the closing value of SPY each week. In the case of a 30-week moving average, we're adding up the last 30 weeks and dividing by 30. That's how you get an average, and you plot that. Now, if you take a look at this lavender line, it has been upward trending over this time frame. The blue line has also been upward trending. However, the yellow line, which is a 5-week moving average, tends to react a little bit faster. And you can see that recently this yellow line dropped below the blue line. So over a 5-week time frame, the market's consensus of value as far as SPY was concerned is that SPY wasn't worth as much over the last 5 weeks as over the last 15 weeks. At least that's the market's perspective. Looking at moving averages can also be a pretty reliable way to look at price trend and price trend changes. On the bottom here, I've plotted an indicator that we like. It's called the MACD indicator. And basically, it's a moving average of two moving averages. So the slower moving line is a smooth average. The yellow line is a 12-period moving average taken from a 26-period moving average. So basically, it does kind of the same thing as the other moving averages. However, I like to plot the difference in these lines down here as a histogram. And if you take a look at these histograms, whenever you see a tick up, generally, not always, but generally, that's the beginning of a few-week uptrend. Now, whenever you see these lines turn red, it's definitely a downtrend. We have seen a bit of a tick up here over the last couple of weeks. So the consensus here is that we've got a very neutral market. It's not solidly uptrending. The trend hasn't changed to downtrend at this point, but we believe that the odds may favor that. Finally, if we look at a weekly chart of SPY, the indicator I have at the bottom of the chart here is a stochastic. It's actually an oscillator. It tracks overbought and oversold areas. Notice that stocks can stay overbought for a long time, as they did here from really during the month of January through the end of February. And typically when these extremes are hit, we often see a change in trend. And now you see we're coming up on another extreme here. The lines that I've posted here, labeled 0% to 100%, are the typical Fibonacci price retracement levels. Fibonacci was a 12th century Italian mathematician, and he discovered that these ratios existed in nature, and we're at really the last turn point here. So taking a look at when is the market likely going to reverse, if more downtrend is going to happen, it's really right here. The other lines that you see here, the blue lines and the red lines, these are Bollinger Bands, and they track really 2 standard deviations out over the last 20 days. And if you take a look, we're right up against that top Bollinger Band also. So we believe that if we do see a market decline from here in SPY, that it could start any time based on the fact that we've got a very neutral chart pattern on the longer term charts. We've got exhaustion tops on the price trend channels. And if you take a look here, we're at the Bollinger Band and the last Fibonacci turn point. So keep an eye out. We could see stocks turn from here if they're going to. That is today's market analysis. It's March 12, and I'm Dennis Tubbergen.